All right, so welcome back to Coffee Cafe. Last thing that we did was we put in a purchase order for our regular coffee and supreme coffee. Okay. So then on the same day, Monday, June 10, we received stuff from Hallie Rose. Okay. So let's see what we received. Okay. Now, in this case, we received the coffee brewer and coffee grinder. In this case, there's actually some fixtures that needs to be done with the coffee brewer or for the coffee grinder. So in this case, it says right here, additional work needs to be done before before grinder is put into service. Okay. And of course, a reinforcement foundation is needed, and as well as electrical work. So there needs to be another electrical outlet for it to be able to run. So in this case, what I want you to do is there is an account that I want you to place it in, and I want you to put it under miscellaneous expense. Why? I just want you to do it. Okay, it's a miscellaneous expense is a random account that exists in your chart of accounts. So I'm telling you, I want you to put it there. Okay? So let's go ahead and put the coffee grinder and coffee brewer in there. Now, of course, I would also like you to calculate everything, of course, so you know how much each item is when you put it into miscellaneous expense, because we will eventually take them out separately and put them in their individual accounts. So in this case, I want you just to go ahead and do that. Now, what is so unique about this transaction? Right? We have the subtotal, we have tax, then we got the total, then we got the down payment to be in effect, and then of course we have a new total due. Okay? So in this case, how am I going to journalize this transaction? Right? So of course, like I've mentioned before, I want you to dump this into miscellaneous expense because there's extra stuff that I need to put in there, like make fixtures on the coffee grinder. So I want you to put it under miscellaneous expense, okay, which is just a temporary account until we completely done with the entire item. Then we remove it out of the account to properly place it into its actual account. Okay, so in this case, I want you to put it under miscellaneous expense, and that account is going to be account number 19,990. Okay. Now, what else am I gonna assume when I receive a bill? Am I gonna pay for it now? Let's just say no, because I have other things that I need to save my $6,000 for. Okay. Accounts payable. Okay. And lastly, I had a down payment. Where did I put my down payment? I have to apply the down payment to this invoice.
Checking.
Not checking. I already issued them a down payment.
Okay.
So where's the voucher? Where did I put that down payment? In prepaid accounts, right? Now that I received the bill, I'm going to redeem my voucher and apply it to this invoice. So, okay. Now, how much was my voucher for? Or my prepaid, my down payment? How much was it for? $1,171.87. Oops, wrong account. $1,171.87. What's my total amount that I owe in grand total, including tax? What's my total before I put the down payment in there?
$3,806.02.
Good. And then last but not least, so then how much do I owe?
$2,634.15.
Good, right? 2,634 and 15 cents. So I just did quick math real quick just to make sure that those numbers pan out evenly. Right? So here you have everything, all the information that you need, right? You have who you received the bill from, Haley Bros. You have an invoice number 351. Okay? Were you given terms?
Yes.
All right, what was it?
1%, 15, net 30.
Right? I'm given terms. So if I pay within the first 15 days, I will get a 1% discount. If not, the whole entire bill is due in 30 days. Okay? So now what I want you to do is let's go ahead and put this into miscellaneous expense. But what I want you to figure out too is how much is the each asset going to cost you. So then when we do move it out, it's a lot much more easier to figure out, okay? So let's go ahead and plug these numbers into your ledger. Okay. So first that we have here is miscellaneous expense, which is right here at the very bottom. It gets the 10, right? We got coffee, brewer, and coffee grinder. Okay? Post reference, journal. We're still on number page 3. And how much are you going to debit this account for?
3,806
Okay,
and 2 cents.
good. Now let's go ahead and figure those numbers out on the side here. Okay? So let me clear this area real quick. Okay, so here, let's do some quick math. So I have a brewer. And I have, I'm trying to think, should I do vertical amounts? Yeah, okay, grinder. And then I have total, okay? So right now, let's take a look. How much was my coffee brewer for? It was for $2,266. $2,266. And of course, my grinder was for $1249.95. So that for grand total should be $315.95. which is true, right? Then I need to distribute $290.07 worth of tax. So in this case, how much am I going to be taxing at? Right? So in this case, I got 194.5 and 1209. So in this case, let's see, okay, so that means this is going to be 186.95, and this is going to be 103.12. Okay, and let's see if those taxes matches 290.07. So that means right now with that bill, we know that my coffee brewer is equal to $24.52.95, while my coffee grinder is $13.53.07, giving us a grand total of the $308.06.02. Okay. So this is good information to keep on the side, because when I do take out my asset, my fixed assets, or if I take out my coffee brewer, at least I know how much to take out. Okay. So that's that right there. And you can even make a note here if you want to, but I already did the calculations on the side, so you at least have that. Okay. So then let's go ahead and see what's next. We have an accounts payable next. Accounts payable. Here we are. And this is for invoice number 351. Okay, general journal number 3. And because I owe money, right? I owe $2,634.15. Okay, which will bring my account balance now to $11,863.90. So $2634.15 is what I owe. Okay. I also have to now apply my prepayment, because I had a down payment that I am going to redeem, or I'm going to apply to my invoice. So here, prepaid accounts. Okay. And I'm going to go ahead and make a note here. Apply down payment on grinder and brewer. Okay. General journal number 3. And this time I'm going to credit my account for the $1171.87. Okay, so this is going to reduce the amount down to $66.54.17. Okay. Now remember, this down payment is going to go towards my original bill. So in this case, my original bill was for $3806.02, right? Then by applying this prepayment, right, it now has reduced the amount that I owe. Okay, because this is a down payment, right? So therefore, I don't owe as much. Okay. So $66.54.17 is what you have left in your prepaid accounts. Okay. So then, right, I did my journal. I completed my ledger. Okay. I need to go and update my subsidiary ledger, because now I dealt with the vendor. I dealt with a vendor named Haley Bros. Because now I owe Hallie Bros some money. Okay? So here you go. I go ahead and put the date in there. Hallie Bros, right? I bought a coffee brewer and coffee grinder. And then I'm going to put down payment applied. Okay. The invoice number was 351. General Journal number 3. Terms. I get a 1% discount if I pay within 15 days. If not, the whole bill is due in 30. So then, what is my discount due date? When is my discount due date? When's the last day I need to pay?
25.
June 25th, okay? But when is the bill actually due?
Would it be July 10th?
July 10th, correct, right? There's only 30 days in June, so in this case, Excel is smart enough to figure that out as well. Okay. And of course, how much was the bill due for? Well, we had a prepayment of $1171.87, and the actual total amount that the original bill was due was $3,806.02. So therefore, if you apply the formula, right? If I do my invoice amount minus any prepaid, minus any returns, minus my discounts, minus my payments, I can figure out that I owe $26.34.15, which is what my bill tells me. Now you can even also add in your amounts here. So then if you do end up returning a product, right, at least you know how much each item is worth. So in this case, I could write that information in here as well if it's necessary. If not, then you don't have to do it. Okay? It's your choice what you want to do. But in this case, I'm going to tell you this. We're not going to return anything. Okay? But it is good to know when I do this, right? What if I make the payment in time? I need to figure out how much my asset cost me first, okay? In order to figure out what my discount is. But it's okay. You don't have to do it now. You can do it. You don't have to do it now. You can wait till later until you pay to figure it out, because again, you also have the possibility that you might miss the payment. So in this case, I'm going to go ahead and skip that part for now and not add in any other information, because I do have the calculation done on my ledger, so I'm okay there. Okay. And that's it, because it's not inventory, so we don't need to go into inventory items here. But now we need to know that any fixtures that are going into either of these assets, you must place it in there because it's part of the cost of the asset. Okay? But for now, I placed into miscellaneous suspense, and now we can go ahead and move on forward. Okay? So then, of course, I get accompanied a separate bill, right? Where it says right here, split the freight 50-50. Okay? So in this case, a third party vendor decides to ship the coffee brewer and coffee grinder to me. A separate shipping company sent me this. Now, what do I do with this separate shipping invoice? Okay, so in this case, it tells me that for the shipment of the coffee brewer and the coffee grinder, it cost me $350. Okay. Now in this case, how am I going to recognize this?
With freight expense.
Not
And
freight expense, because what would this be a part of? This is shipping
It's-
for, go ahead.
It's purchase expense, isn't it? Still.
Not a purchase expense. This is shipping costs for the coffee brewer and coffee grinder.
Does it just go under business expense then?
This is not a business expense. Okay, so once again, what is a coffee brewer and a coffee grinder to me in the company? What are these?
An asset?
What kind of asset?
Fixed.
It's a fixed asset, right? Now, when we learn about depreciation, what is going to be determined as the cost of the asset?
the total amount and the freight expenses and all that.
Correct, right? So therefore, this is part of the cost of the asset, right? Shipping. Because the definition is that it should be all costs it takes to get not only the asset to the store, but the asset ready for service. So in this case, if a shipping company decides to ship the assets to your store, what's your assumption? Is it a separate cost that you're paying for, or is it going to be included in the price of the asset?
So the price including the asset.
Correct, because we're gonna also depreciate at the end of this month, at the end of June. So in this case, I need to get the full amount of what the asset cost me. So in this case, where are my coffee grinder and brewer? Where are they currently in?
Miscellaneous suspense.
They are currently in miscellaneous suspense. So in this case, that's what I have to do. I need to dump it in there because right now, that's exactly where they are right now. Okay. Now in this case, how am I going to be paying for this third-party vendor? How am I going to be paying for this third-party vendor?
With checking.
How do you know that? I mean, why?
It says COD, cash on day.
Cash on delivery. Yes. So in this case, this is a COD receipt, meaning you need to pay up at time of delivery. So in this case, right, I have to write a check out. And this is going to come right out from my checking account. Okay? For a total of $350. Okay? So, first things I got to do is go to my check register. Okay? I'm writing $350 to who?
Haley Bro.
All right, let's take a look at this receipt. Who sent this to me?
Valley Delivery Services.
Valley Delivery Services. So this once again is a third party vendor that Haley Bros uses to ship items out to me. So they don't they're not this they use another shipping company to ship things out. The Haley Bros doesn't have its own shipping company. So in this case, it's not to Hallie, it is to Valley Delivery Services. Okay. So here we go. Check number 1511 is the one we're going to be writing. So all right. What is my invoice number here? 301. My terms was COD. And I paid with check number 1511. Okay. All right. So now I must follow through and go to my ledger. Because now I made a miscellaneous suspense. All right. So I have right here. Shipment cost for coffee, brewer, and grinder. Okay, general journal, we're still on the third one. And now I need to increase this by $350. So, in grand total, how much do I have in my miscellaneous suspense? What's my account balance? Right? I need to take my previous balance, add my debit, subtract my credit. So how much is my current account balance in my miscellaneous suspense account?
4,156.02.
Good. 4156.02. Now in this case, right, I was very specific on how to split the freight, right? It says above here, split the freight 50% to the coffee brewer and 50% to the grinder. So in this case, my total amount is $350. So I need to split 175 to each coffee brewer and coffee grinder. So in this case, I'm going to go ahead and add that to my calculations here, right? Because now I have to add my shipping cost, okay, of $350. So right now, my total assets cost right now is going to be for my coffee. Oh, wait, hold on. Okay, whoops, sorry, my bad. Not supposed to add all that many. So my coffee brewer is for $24.52.95 plus my $175 of freight gives me $26.27.95. While my coffee grinder is now $15.28.07. Okay, which gives you $41.56.02. All right. So this is what my current costs are. And I'm going to highlight this so I, kind of know this is my totals. Okay. All right. So then, now that I have this, I also now have to update my checking account because I spent money, right? I had to pay for the delivery charge. So in this case, I had to write check number 1511. General Journal 3 for the $350. Okay? Which then is going to drop my value down to $5,752.42. So, again, I am spending so much money. Okay, I still need to save that money to make any other expenses that I need to incur right then and there. So in this case, my assumption is I'm not going to pay any bills until later on. Okay. So there you go, $5,752.42. So then let's go ahead and update my subsidiary ledger because I had to pay a third-party vendor. And I want to keep a good track record of that third-party vendor in case they come out and say, you didn't pay me. All right? So in this case, Valley Delivery Services, right here. Okay? Right? We got shipment. Of coffee brewer and grinder. Okay. The invoice was 301. General Journal number 3. Terms was COD. And I forgot to write the check number in here. Right? And we paid with check number 1511. Okay. So again, COD means cash on delivery. So there's no discount due date or a due date, right? Because it's cash on delivery. It's due right then and there. So in this case, invoice amount was $350 and the payment amount was also $350. So in this case, you owe Valley Delivery Services nothing. Okay? But a few things that you should keep note is whether Valley Delivery Service put their check into their bank account. That's one thing you need to look for. But also to prove that a transaction has happened is that you have the receipt or the invoice and you have proof that you wrote a check out to them. Okay? Okay? This is also for any reason that you want to ship back the items, right? You need to contact Valor Delivery Services to go ahead and make those shipments back. Right? You're going to notify the vendor. The vendor is going to notify that Valor Delivery Services is going to come pick up the stuff. Okay? All right, and then last but not least, we need to update our purchase orders because we received items. Okay, in this case, what did we receive? We received the coffee brewer and the coffee grinder. Okay. In this case, you're supposed to use the reference number from the actual invoice, which was 351. Right? So there we go. We finally received, so far so good. We have everything that we received. And then now all we're waiting for is our coffees. Okay. Everybody good so far?
Yep.
Okay. So once again, that was just shipment from the Valerie Delivery Services for the assets. Okay. So then it says right here, remove coffee brewer from miscellaneous suspense. Okay. So how do you move from one account to another? Okay, so in this case, I want to move it out from miscellaneous suspense and move it into my coffee brewer account, right? I have a coffee brewer account, right? Now, how am I supposed to move from one account to another?
You debit coffee brewer and credit miscellaneous.
Correct, right? You're just literally going to you're gonna debit whatever account that you're trying to take the asset out from, and you're gonna take it out. And when you take it out from the miscellaneous expense, you're going to use the opposite flowing debit or credit. So in this case, right, because when I debit to acquire the assets, right, I increase my miscellaneous expense. Now in this case, because I'm trying to remove it out from miscellaneous expense, I need to credit the account out. And by doing so, right, I am going to be doing what's called a internal account where I'm adjusting my accounts, right? Because I am moving from one account to another. So in this case, right, I am moving into my coffee brewer account because it is completely done, okay? And I'm taking it out from my miscellaneous expense because that's currently where it is, that is where it's currently sitting, right? So, what's my coffee brewer account number?
Uh, 1,000. Uh, 15,010.
15010, okay? And then my miscellaneous expense account, right? I used it in 3 transactions so far already. So in this case, how much is going to be my coffee brewer? Well, let's take a look in my assets real quick because I calculated that, right? In case, because I told you to calculate it on the side because we are eventually going to move them out from the account. So let's take a look. Right now, my coffee brewer is a total cost of $26.27.95, while my coffee grinder is for $15.28.07. So in this case, I'm going to be removing $26.27.95 out from my miscellaneous suspense account. So $26.27.95. Right? Because that's what my coffee brewer cost with tax and shipping. Okay? And I don't need to do anything else to the coffee brewer because I only need to do fixtures for my coffee grinder, right? I noted that I need to do some foundation work and some electrical work for my coffee grinder, but not for my coffee brewer. So in this case, I am completely done with my coffee brewer and I can remove it from this account. Now in this description, it is up to you what you want to say here, but I'm going to go ahead and say to move, or I guess I could say to remove coffee brewer into its own account. Okay? Or you could say to remove coffee brewer out from miscellaneous. Okay? Miscellaneous suspense account, right? I'm just moving it out, putting it into its coffee brewer account. Okay. So then, now that I moved it out of the account, I now need to update my ledger. Okay. So in this case, I'm moving out $26.27.95 out from my miscellaneous expense. So in this case, I'm going to go to my coffee brewer first, and then we can go ahead and take out from our miscellaneous expense afterwards. So in this case, it's under equipment. Now I already have a pre-existing coffee brewer from when we acquired the business. So in this case, that's completely fine. What we can do here is we can just go ahead and call this coffee brewer number 2. And of course, I'm going to add all the details into this coffee so it cost me $22.66, okay, plus 8.25% tax, which equaled, let's go ahead and take that look over here, okay. So let me see, my coffee brewer, the tax on it is $186.95, right? Plus shipping of $175. Okay. General journal number 3. And now I'm going to increase the asset by $26.27.95. Which now is going to increase my coffee brewer account by $4,526.95. Cents. All right, so now that I removed my coffee brewer, or actually I placed it into my asset account, now I need to take it out from miscellaneous expense. So here's my coffee brewer, right? I just entered it in here for the $26.27.95. Now I need to take it out from my miscellaneous expense account. So in this case, I need to remove it. So it is the 10. And I'm going to go ahead and make a note here that I am removing coffee brewer number 2. Okay. And this time I'm going to do $26.27.95 because that's how much my asset is going to cost me. So then I should be left remaining with the $1,528.07, which we know to be how much my coffee grinder is right now, okay, without the other extra fixtures. Okay. So now that I removed all those accounts, question to you: do I need to update my subsidiary ledger at all? Do I need to?
Yes.
Why?
Because isn't it still in miscellaneous? Or wait. Oh no.
No, because in this case, right, my subsidiary ledger is going to be dealing with people that are involved with the company. in this case, did I have to communicate with anybody to remove my asset from my account, from my own accounts? No, I didn't deal with anybody to remove my account from a miscellaneous account to the coffee brewer account. So in this case, right, this is called, once again, an internal transaction, right? It didn't deal with anybody. It was just an internal transaction that dealt with just my accounts alone. Nobody was involved. So in this case, there's no need to involve anybody, so no need to update my subsidiary ledger. Okay? All right. So let's go ahead and take a look now. You're going to hire LV Remodeling Company to reinforce the foundation for the coffee grinder. Any transaction, do we need to record this? Sorry, do we need to record this transaction?
We already did. Oh wait, hire remodel. No.
No, because we just simply hired them, right? Nothing has been into effect yet, but at least now we know we hired somebody to do some work on the coffee grinder. Okay. So then it is the next day, Tuesday, June 11th, and let's see what will happen here. We end up receiving a bill from LV Remodeling, okay, company for the remodel of the store. So in this case, right, we used LV Remodeling twice, right? We did it for remodeling the store, and now we just rehired them again to complete the foundation for my coffee grinder. So in this case, right, this job here was just remodeling for the store itself, not the reinforcement for the coffee grinder. So in this case, they sent me a bill for $19.80, okay? Invoice number 1754, due in 4 days, okay? So in this case, right, this is going to be considered a job, right? And I want you to use this as a subcontractor labor expense. Okay? Because in this case, right, we hired them to do a job for us. And the job was to remodel the store for us. So in this case, I'm going to journalize this as a subcontractor labor expense. So in this case, subcontractor expense. So what account number is that?
Would it just be a labor expense?
So labor expense is the main account. Is it more specified?
Would it be subcontractors 60,000?
60,510. Yes.
I see.
Okay. Because yes, it is a labor expense, but in this case, if there's an even better account that you could associate this with, so in this case, it's broken down to sub accounts, right? So in this case, the sub account would be better. Okay. So in this case, subcontractor expense, account number 6510. Okay. What about my credit account? Am I going to pay for it now or going to pay for it later?
Later.
We're going to pay for it later, right? Right now, we need to save that money for the rest of the other expenses. So in this case, what am I going to treat this as? How am I going to journalize this if I'm going to owe the money? If I'm not going to pay now?
Payable?
Accounts payable. Good. Okay. Which is account number 20,000 for a total of $18.90. Okay. Now, let's go ahead. We have all the information we need, right? We have that this is from LV Remodeling Company. Okay. We have the invoice number 1754. We have terms that it's due in net 4 days. Okay. And if you want to add details into what this is, you can, but I'm going to go ahead and, put all the rest of the detailed information in regards about this invoice in other places. Okay, so LV Remodeling Company, 1754 and net 4 is good enough. Okay. So now we owe more money. So let's go ahead and update our ledger so we know how much money we owe now in grand total. Okay. So first, let's go ahead and recognize that expense that we just incurred, right? We fixed the store. So in this case, this was a subcontractor labor expense. So here it is. Right? And this I'm going to go ahead and say remodel store. Still on the third journal, right? We're at the end of the third journal. And it's for $18.90. Okay. And now, because we are not paying it now, right? Our assumption is we're going to be paying it later. I increased my accounts payable because, again, I'm not going to make a payment now. I'm going to make a payment later. So in this case, invoice number 1754, general journal number 3, and I'm going to increase my accounts payable by $18.90, giving me a new account balance of $13,753.90. So now we are racking up a lot of debt. Okay? For $13,753.90. And of course, we need to update our subsidiary ledger because now, again, we were sent a bill and now we need to make record that we owe it, right? That we owe to LV Remodeling. Okay? So LV Remodeling is going to be here you go, LV Remodeling Company, right? Remodeling store. Okay. Invoice number 1754, post reference, page 3, terms. I'm given net 4, that the bill is going to be due in 4 days. So that means, when am I expected to pay?
15.
By the 15th of June. Okay. In this case, no prepaid amounts, but I know that I owe $18.90. So therefore, the formula once again is going to be invoice amount minus any prepaid, minus any returns, minus any discounts, minus payment. So in this case, I owe Elvin Remodeling $18.90. So here, some of them have totals, some of them don't. You might have to reactivate them, but they do have totals at the gray bottom here to give you a total amount that you owe each vendor, the account balance. Okay. Okay. So then we decided to hire some people, right? We hired an employee. So we hired Irene Jameson, okay, for the in-store help. Okay, so she's going to be in charge of the cash register, okay? So, of course, her pay is going to be $8.50 per hour, okay, with no extra benefits, okay? And she's going to be scheduled to work 40 hours per week, Friday through Tuesday. So that means she gets Wednesdays and Thursdays off. And she's going to be working to start on the 14th of June, okay? Payroll period is bi-weekly, okay? Now, if you check the calendar in Excel, it's going to tell you that that when the payroll periods are going to start, okay? So if I go to my chart, my journal here, I have a calendar right here saying, okay, well, the 17 is going to be our grand opening. Okay, so that's when she's going to start. She's going to start working on the 14th. So she's going to help us set up the store. But if you actually look carefully on the 14th, right, is going to be a payday. Okay, and the 28th is going to be payday because it's Friday, right? So in this case, she's going to start working on the 14th. So she's going to barely miss the pay period, right? Or in this case, she's going to start on the day that it's payday. Okay? So she's going to start on the 14th and then we're going to pay her on the 28th. Okay? So that's just a little FYI here, looking over at the calendar of when she's scheduled to start working. Okay? Now, in this case, right, do I need to journalize this transaction?
No.
No. Why?
There's really no transactions or anything like that.
Okay. What's today's date? Today's the 11th, right? When does she start working?
14.
The 14th. When do we pay her?
On the 14th.
Not on the 14th. On the 28th, right? Because she misses the pay period that day. And on top of that, she started working. You can't pay somebody for working that one day, right? Because that's not how payroll works. Payroll works starting Monday the 17th all the way to whatever the date that is, okay? Or in this case, it's going to start on the, I think it's like the 9th, the payroll period starts. And you can even see it on the calendar too. I think I marked it on when the payroll period starts. So in this case, calendar, right? If the pay period, right, or the pay day is going to be on the 14th, that means the pay date started on Monday the 3rd. Okay, so in this case, right, the way that we calculate payroll is that it's going to start on the 10th and end on the 23rd. That's the pay period, okay, payroll period, right? It's going to calculate how many days she worked from the 10 all the way to the 23rd. And then you calculate here to make the paycheck available on the 28th. That is usually how payroll works. So in this case, when we start her on the 14th, she'll be in the middle of a pay period week. So she'll get paid for the 14, 15, 16, 17, 18. She misses Wednesday and Thursday, 21st, 22nd, and 23rd. Okay? That's just assuming she doesn't take any vacation days or sick days. So, again, that's how payroll works, is that usually if you get paid on Friday, then it's going to be the week before is going to start the payroll period, and the payroll period is going to end on the 23rd. Okay? So that's just a little more FYI there. Okay? But in this case, right, she hasn't started working, and second thing is we don't pay her until the 28th. So in this case, no transaction is necessary. However, you should definitely keep track of this person, right? Because if she's going to be your employee, she's got to submit to you a W-4 form, and also she also has to submit other forms such as, birth certificate, social security, just to ensure she is either a U.S. citizen or if she's a visitor. She was to have a temporary social security card to be able to work in the U.S. with a visa. And et cetera, right? She has to go through a lot of other stuff than just going through to hire her. So in this case, right, I also want to keep track of how much I pay her, when she works, and stuff like that. So in this case, I have a section in my subsidiary ledger for just employees, okay? So if you're doing the Word document, this is your payroll sheet. Okay, so in this case, payroll period, okay? So pay date is going to be June 28th. Who is this first name? It's Irene. And her last name is Jameson. And what is her pay rate? It's going to be $8.50 per hour. So in this case, we need to rack up how many hours Irene has worked for the company, okay? And then we will go ahead and process her payroll there, okay? All right? Not only did we hire Irene, who else did we hire here? We hired Albert Allen as a sales representative, okay? Commissions is to be 10% based on total sales. Okay, so we're only going to pay him 10% on total sales. Okay, I know it's very low. Okay, and of course, benefits deducted from commissions. Okay, and of course, this person is not scheduled to work until the 17th of June. And again, the pay date is going to be the same as the payroll period, which is biweekly. So in this case, we hired Albert Allen not as a worker, but a 1099 worker. He's an independent contractor, right? Because his salary is based on commissions, or his earnings is based on commissions. So in this case, right, this is a 1099 worker, right? Their only main job is to come in whenever they want to and earn 10% of the sales. So he's going to be the one that's going to be responsible to find those individuals to buy from our company. Okay, that's it. Okay, and of course, once again, it's going to be 10% of sales, so it's going to be not a constant number. And he's scheduled to work on the 17th of June. So in this case, do we need to make a record of this?
I would say yes, but I don't know where.
Okay. Not in the journal, but yes, you should put it under the same one, except not under employees because it's a 1099 worker. He's going to be under commissions. So, who is this person? Albert Allen. Okay? And he's going to be working for 10% of sales. Okay? So this is where, right? This is where we're going to be configuring these numbers out. Now, as far as sales orders, we are not going to be responsible for making those sales orders. Okay? It's going to be strictly Albert, but we also need to make sure that whatever Albert submits, right, and he completes his sales orders, we should keep track of it so we can calculate his earnings for the week or for the whatever, for the pay period, okay? So in this case, right, we're going to be keeping track of his sales. So then, if he does come back to us and said, well, I did all these sales, right, at least we kept track of the sales for him too, right? So there you go, right? No transaction yet because he hasn't started working for us yet, and we agreed that we're not going to pay him until the same day as Irene, which is going to be the 28th, okay? Right, because he missed the pay period anyways, which is on the 14th. So then it says here that we're going to pay $85 for a quarter-page newspaper ad to run in the LV journal from the 15th of June all the way to the 20th of June. Okay. And of course, it's going to be for the Las Vegas Register Journal, pay with business credit card. Right? So, right now, what did I purchase? We bought advertising. Okay? How did we pay for the advertising?
Credit card.
With a business credit card. So let's take a look at our chart of accounts. Okay? Do we have an account for advertising?
Yeah, 60,000.
Right? It's an expense to the company, right? So in this case, we do have advertising expense. Now let's take a look at I paid with a business credit card. So what does that mean?
Visa payable.
It's a Visa payable because in this case, right, that credit card money is not ours. It's going to create a liability because we're going to owe to a credit card company. So in this case, boom, the liability is going to be a Visa payable, which is $22,000. Okay? So now I'm going to go to my journal, right? Now I'm journal number 4. Okay? It is now Wednesday, okay, the 12th. Right? It is Wednesday the 12th. Okay? And we paid $85 to have a newspaper ad run on the Las Vegas Register. So in this case, right, we have advertising expense. For $60,000. And because we used a Visa credit card, right, we're creating the Visa liability. Okay. How much did we charge on the Visa credit card? $85. Okay. So now I'm going to make a note here because I paid somebody, right? Who did I pay? You paid to the Las Vegas Journal. Okay. This case, no receipt or any transaction. So that's all you have to really do. It's just that much right there. Okay. You could also add details saying, well, you paid them for a quarter newspaper ad. Okay. Okay. So then I need to go and update my ledger accounts. Okay, because now I've incurred some advertising expense. So going to my expenses, right? Top of the window, right? I paid, or in this case, yes, I paid for 1/4 page newspaper ad, general journal number 4 now, because I started a new journal. Debit $85, so therefore I have a total of $85 to my advertising expense. Okay. And I should also update my other account because now I used my Visa credit card for the very first time. So in this case, Visa payable. I charged my credit card, okay, on June 12th, right? Now, this is what you can do because obviously when you get your credit card statement, you're not going to get the information in regards to what this transaction is. You're only going to get the vendor and the transaction number. So in this case, right, I'm going to go ahead and make sure that I write LVRJ. And this transaction was to buy a quarter page news ad. Okay. Post reference, general journal number 4 now. And I used my credit card. So therefore, I owe Visa, or in this case, National Bank Visa credit card, $85. Okay. And of course, because now when I paid for services, right, I paid LV register. So in this case, they have to guarantee that my quarter page newspaper runs on those dates. Okay, so in this case, I need proof that a transaction has happened. So I'm going to locate LV register. There you go, Las Vegas RJ, right? That I paid them on the 12th for the quarter page newspaper ad. Okay, to run on 15th of June to the 20th of June. Okay, and I paid with a Visa credit card. So in this case, did I have an invoice number? Not really. You should have some kind of transaction number, but in this case, that's okay. All right. Post reference, once again, this was done on the 4th page of my journal. Of course, because they made us pay at time of service, right? There's no real terms here. But I did have an invoice amount for $85 because that's what they quoted me for. And I paid using a Visa credit card. So in this case, right, it acts as if I had the money to go ahead and pay for services, right? With the Visa credit card, you pay up front by paying back a vendor. Okay, so that's the idea of a credit card. So in this case, I owe nothing to LVRJ. However, I owe money to the credit card company. Okay. Now, that doesn't mean you necessarily have to update your National Bank Visa credit card, because because you haven't received a bill from them. You only did was just rack up the first credit card charge. Now, in this case, how credit cards charges work is that you're going to be racking it up for the whole entire month of transaction. They bill you, and they also bill you interest as well on the amount that you spent. So in this case, right, I don't need to update my National Bank Visa credit card because I haven't received a bill yet from them. I haven't finished charging the card yet at the end of the month, till the end of the month. So in this case, there's nothing to record in National Bank Visa credit card, okay? You only record when you receive the bill, okay? Is everyone good so far?
Yeah.
Yep.
Okay. So let's go ahead and do this last transaction here, and then we'll go on break, okay? So it says here that we also paid for 2,000, we ordered 2,000 flyers, okay, advertising flyers for our grand opening store, okay, which cost us 5 cents for each flyer from City Printers, okay. A 50% down payment is required, and of course we paid with the credit card, okay. So in this case, a down payment is required because in this case, right, they don't want to print the job for 2,000 flyers in case that one day we decide not to pick it up, right? So they require a 50% down payment. So in this case, once again, this isn't a deposit. We're not going to get our money back, right? We're going to basically pay for a voucher or pay for a voucher, right? And then once we pick up the rest of the flyers, it's going to apply to the receipt or the invoice, right? So in this case, we're going to be using another prepaid account because I'm paying for basically half of the flyers now, and then I pay the other half upon pickup. Okay? And again, down payments are very common for many, many companies because they can't trust their customers to pay to do a project for them and expect them to pay them guaranteed. No, it's a bad reality, but that's why they always say, hey, I want you to commit to this project, and I'll do it for you, but you have to pay me half the money now. Okay? So in this case, I need to do a down payment for $50 to City Printers, and I used a business credit card to pay for it. So in this case, what I'm going to be journalizing here is a prepaid account because I'm making my down payment. And I think we're still on the same day. Okay. Down payment. So prepaid accounts, which is 18,600, and we're using a Visa credit card to pay for it. Okay. Now in this case, the deposit was for 50%. So in this case, what is 2,000 times 0.05, right? That gives you $100. So in this case, the deposit is for $50. Now, of course, you're going to make a note here that city printers, right? And you ordered 2,000 ad flyers and 50% down pay. Okay. Okay, a 50% down payment it was required. So $50 was required. So then now I need to update my ledger. Okay, because now I paid for partial credit of service. Okay, so assets, we're going to go to prepaid accounts, which is right here, prepaid accounts. It is June 12th, and you're going to go ahead and say down pay on 2,000 flyers. Right? General Journal number 4 for $50. So in this case, I'm going to increase my account to 670417. Okay. So then we also have to update our Visa payable because in this case, I charged my card once again. Okay. And then of course you're going to say city printers. Right? 2,000 flyers down payment. Okay. General Journal 4. And again, I increased my liability by $50. So therefore, I have a total on my credit card to be $135. Okay. Now the question here is, what about advertising expense? In this case, this is just a prepayment. We haven't picked up the flyers yet. But when we do pick up the flyers, that's when we recognize the entire amount of what that advertising expense was for. Once again, this is just a down payment, right? We haven't acquired the asset or whatever we purchased. We haven't acquired it yet. So in this case, it doesn't recognize until you actually either incurred the expense or you received a bill, okay? So that's what this idea is. Just like when we purchased the coffee brewer and coffee grinder, why didn't we put the down payment as part of the coffee brewer and the coffee grinder? That's the same idea. We haven't received the asset yet. We haven't received the items yet. We haven't done anything yet except for make a down payment, okay? So that's the same idea here, okay? And of course, after that, we also need to update our city printers because they owe us 2,000 flyers, right? Or at least 1,000 of them because we already paid half of it. So in this case, that's definitely something you should make a record of so then you know that the city printers, if they try to cheat you in any way, that you have proof that you have, the proof that you did pay, and so on and so forth. So here you go, city printers. Okay. Right. Down payment on 2,000 flyers. And you paid with Visa credit card. Invoice, we haven't received the invoice yet just because, right, it's just the, we just put it on the order. Post reference, it's again General Journal number 4. terms, we haven't received the invoice or anything like that yet, but most likely you pay at time of pickup, right? You pay upon pickup, okay? Invoice amount, because you got charged 50%, you need to put in that 50% down payment, which you made a payment of for $50. You could even go as far as why the down payment is, right? Down payment on 2,000 flyers, right? I'm going to go ahead and say 50% down payment, right? 50% down payment on 2,000 advertisement flyers, right? At 5 cents for a flyer, okay? So you know how much, why the down payment is $50, okay? And of course, if I run the formula once again, invoice amount minus prepaid minus returns minus discounts minus payments, I'm going to get 0. Okay? All right. So I'm going to stop here and we're going to go on a break and we'll resume the rest of the stuff when we come back from the break, okay? So right now it is